Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to Broker Daily Uncut. Your host Jack Campbell here, joined by my co-hosts Phil Tarrant, Alex Whitlock. Gentlemen, hope you were escaping all the wild weather that was going on over the weekend. It's been pretty miserable here in Sydney.
It's a bit wet and woolly.
Yeah, a little bit.
It certainly was. And we saw the event over the Harbour Bridge yesterday as well, which was a lot bigger than everyone expected. And I think listening to what the cops said, I think they sort of dodged a bullet with that one. It could have been quite a safety risk and issue, but everyone got home okay, so everyone's happy about that.
Yeah, it was amazing to see. It was, almost 100,000 people.
So they say, yeah.
Across the bridge. I suppose it shows how many people are engaged with what's going on with geopolitics.
Yeah, it's one of the great things about being an Australian is the right to protest, and free speech. And what a great place to live in when people can actually have a voice and be vocal about how they choose to see the world, and that's not taking a position at all on what the protest was about. But, that's a democratic system and what makes Australia so good. Yeah,
and they certainly braved the weather. There was a lot of umbrellas out there I saw.
Certainly was. I'm sure there'll be, maybe quite a few people off work this next week because there would have been a lot of colds picked up as a result of that. And they reckon that, and I was reading through the paper just the other day, that the influenza season this year has really hit a lot of the capital cities hard. There's a lot of sickness at the moment.
Yeah, well, I just had a party over the weekend that I couldn't attend to, but everyone that went came home sick, and it was a little, what do they call it? It was in COVID where there was the bubbles, so I think that was a little bubble
COVID
itself.
Bubbles, yeah. Anyway, it's not about mortgages, so
no, it's not about mortgages. But what is about mortgages is all the events that have been launching lately. Alex, we had the Broker Innovation in Melbourne coming up 23rd of September. Did you see that one?
Yes, haven't been involved, haven't had the opportunity to go along to the Sydney event, and just being, for the first time in 20 years, genuinely staggered by the difference in cadence of this event compared to the events that we put on, the events that the associations put on, the events that everyone puts on. And I think there's a lot of very good events out there, but that particular format, focus, heartbeat really, really took me by surprise. Most invigorating thing that I've been to ever, to be honest, across all of our portfolio. So taking that down to Melbourne, I think is a really constructive thing. It's really also prompted us to look at our other portfolios and look at how we engage with our audiences. So I think it's great news. If you're down that part of the world, I think it's a great opportunity to engage with something very, very different and very stimulating.
Yeah, we're excited. 23rd of September, that one kicks off the day-long summit, and we've got a new face joining us, our international keynote, Dan Siegler, who's the former head of real estate at Google. So I think that's a good grab they've got there. That'll be pretty interesting to hear what he has to say. Did you have much to do with him over on the real estate side of things?
No, not really. I'm aware of him, and no doubt his session will be good. So I look forward to checking it out.
Yeah, it should be good. And then the other one that was announced was the Commercial Finance Awards, 21st of November. So we had that one last year, and that was a good turnout.
That's the second year for that, right?
Yeah, second year.
And I think they were really impressed with how that first year went. It sold out really quickly, that event. It was a new initiative really highlighting commercial finance, which has been often overlooked. And we all know that many brokers who do resi mortgages also act and operate in and around commercial finance. There are big cohort of listeners of Broker Daily, but this really also is the intersection with the accounting side of things as well.
So who's eligible for that, Jack? I think there's clearly dedicated commercial and finance brokers out there. Is it open to the full spectrum of anyone who participates, or is it really very vertical?
I'll have to double check what all the categories are, but I know that it's anyone sort of in around the asset finance side of things, the commercial side of things. I know BDMs are up for awards as well. And then, SME accountants, SMSF brokers. So sort of that overlooked side of the industry, I suppose.
It's really quite detailed. There's individual and also company awards for it, but to give a sense for individual awards, you've got Agricultural Finance Broker of the Year, Asset Finance Broker of the Year, Cash Flow Finance Broker of the Year. Then you've got Commercial BDMs, obviously, Development Finance Broker of the Year, Private Finance Broker of the Year. So a whole bunch of disciplines there where commercial brokers certainly service their clients, but at a group level also, it looks at Accounting Practice of the Year, Agricultural Finance Brokerage of the Year. Now, that's a big deal, right? Like once you get out of the cities, this is the heartbeat of the nation is our farming and agricultural sector. We obviously have Asset Finance Aggregator of the Year, Asset Finance Brokerage of the Year, Commercial Aggregator of the Year. So that's some very big awards, and no doubt there'll be a significant amount of interest in them. I went to last year's event. It was an inaugural event, and it was as a lunchtime in town, and the room was packed. There was a real buzz to it. You could just, when I walked in there, I went, yeah, we're onto something with this. They had a real spring in its step, that event. So I look forward to going to this year's.
Yeah, it should be good. Last year was actually the first time I got up on stage and did I
remember watching
welcome, and I was absolutely crapping my pants.
How'd that go by memory? I think I videoed it. We should look back at it.
Did you video it? Did you?
Yeah.
I don't know if I want to watch that back. It's a little embarrassing.
It was at the Fullerton Hotel, wasn't it? On a
this one's Four Seasons. Bit different this year. But yeah, if you guys want to nominate yourselves or nominate someone else, 21st of November, it's open now, submissions, so get amongst it. We'll just throw to a quick break. We'll be back after this. And we're back with Broker Daily Uncut. Now, I know we were talking just before, Alex, and something pretty important that's come up that is leading into the August rate decision. That'll be around mid-August. I think 11th and 12th is when they meet next. But the inflation data came in, which obviously is a massive indicator as to the movements of the RBA when they had this decision. Were you across that when it dropped last week?
Yes, I did see the update. I read it across a number of our platforms. And it's kind of a bit of a back to the future thing, isn't it? We're now back to commentators saying there has to be a rate cut now in August. Again, not just through our own media, but looking at sort of various commentators across the board, that seems to be the call. But I wonder what will actually play out. You know, things have a funny way of not necessarily taking the course of action that many of the pundits and I think a lot of Australians hope and believe it should go.
Yeah, well, we were here a month ago saying that they all predicted, all the economists and the big four, that it was going to be a rate cut, and then to everyone's surprise, it wasn't. So I suppose,
well, I think 97% of economists were talking about. I remember I spoke to Alex on the morning of around lunchtime of the rate cut, and I remember saying no cut. Maybe that was just a throwaway line, but it happened, and I thought, yeah, I thought so. But there was just not enough. There was just not enough of a reason for them to cut rates at that point in time. Now, all your economists were giving a whole bunch of insights and sentiments around that, but I think 97% said a cut, and they still didn't cut. So it's like forecasting the weather. Sometimes everyone's got a view and opinion of it. No one really knows what's going to happen. But there is mounting pressure on the Reserve Bank of Australia to reconsider its rate setting where it is right now. Whether or not there's enough in that CPI data to warrant a cut. They did flag the unemployment rate is rising, still within its sort of guidance, but they have noted that unemployment rate is rising, and that's something to be considerate of. But again, if you scratch the surface and go deep into the numbers, the inherent sort of health of the employment sector is largely driven through government-based spending, right? Whether or not there's sufficient investment in the private sector, it's the numbers are always skewed at the moment because of the way in which spending's taking place at a governmental level. So, yeah, whether there's enough, whether there's any pressure being applied to the RBA to get a rate cut away, who knows?
I'd be interested to see the skew of who votes for and who votes against, because it was, 30% of the board last time voted for a rate cut, and then it was 6. I think it was 3 voted for and 6 voted against. So now that they're publishing that data and showing who's voting, and who's not voting.
I didn't know that. So they actually show who voted, which particular board member voted for.
They didn't show names. They just showed how many voted for and how many against.
I was going to say, I was a bit surprised on that basis.
You might get a bit of hate mail if they
chased out of town, right? You know, and there needs to be a level of discretion around what happens in and around that board meeting. You know, it is a decision of the RBA, not the individual. Hence the reason why you would have a what would appear to be a very diverse board with a number of different people viewing the policy setting from and through different lenses. Yes, I'd be surprised if they. That's also they'd probably get a bit of hate mail for that one and would want to fly under the radar. But I think it'd be interesting to see whether or not they're all on the same page at the next meeting, or just what happens behind the scenes, whether there's a bit of arguing and disagreement behind the doors at the board. Well, you got to think about it. You're already in August, right? It's not too far away before they'll be talking about what's going to happen with Christmas spending because of the RBA interest rate setting.
Yeah.
But I did see some stories coming through. I was thinking of Broker Daily last week where, there's mortgages getting written now with a 4 in front of it. Did I read that correctly?
Yes, yeah. So I think lenders are getting ahead of the decision. Fixed rates, yes. And then there's even variables now. There's only one lender. It was Police Credit Union, dropped there to 4.99, so just under that 5% mark. But
what for owner occupied?
I didn't have a look at the specific policy, but I just know that their lowest rate was under the 5s. And, a lot of commentators saying whether this will spark a bit of competition and whether it will continue.
That's a sharp rate.
Yeah, we're getting in before the rate cut, I suppose. I know they did that last time too because everyone was expecting a cut and then it didn't happen.
Yeah.
But good news for borrowers at least that rates are coming down.
Well, I do note also over the weekend the ACTU secretary, so the head of the ACTU, the Council of Trade Unions, again, as we go through, and I was in Canberra last week, and obviously there's a lot of discussion around productivity at the moment and the Productivity Commission and how they can shape a more vibrant economy here in Australia. The ACTU secretary sort of thrown hat in the mix and again calling for changes to taxation policies around investment properties and negative gearing. So whether that's going to be thrown into and bundled up as part of this whole productivity mantra, the rhetoric I heard was very much around, again, negative gearing is keeping younger Australians out of the property market. So,
well, when I jumped on to Broker Daily, that was one thing I chased early. I was like, why has no one touched negative gearing? I would think that would be a great way to get more people into the property market, but the more people you talk to, and it's people don't really want to touch that topic.
I think the evidence is clear what would happen if they were to remove and or tinker significantly with negative gearing, what the consequence would be.
Yeah, I'll jump in. You've got to look at the whole side of the equation. If you got rid of negative gearing, there would be bloodshed for tenants. There would be no property available for tenants. You would have a crisis on your hands. It's really easy to say, hey, get rid of negative gearing and first-time buyers can get into their properties easier, and that would be a tiny part of the equation. There are a lot of tenants who will never be first-time buyers. So, they will end up with investors will just sell their properties off. It would, and you're going to put a lot of investors, they're not all exceptionally wealthy like Phil Tarrant. There's a lot of humble, doctors and nurses.
Struggling podcasters.
Really seriously. So again, Phil and I caught up with the state manager for LJ Hooker for a couple of beers before the rugby a couple of weeks ago. Really interesting talking to him about the problems down there and the real crisis that they have down in Victoria around available rental property. And the thing is that the people are getting hurt, Jack, as investors, people like yourself, where you go, do I go in as a first-time buyer and buy my own apartment in Sydney where I can afford, or maybe I'll go and buy a place in Perth or Brizzy. So there's an awful lot of investors in the marketplace, like yourself, young people. My son, he bought an investment property, with his own savings at around sort of 25, 26 years old. These are the people, if you got rid of negative gearing, they'd be gone. They would not be able to afford to hold the property, and you would end up with a genuine housing crisis. So whilst more should be done to help support first home buyers, get in the market. The government seems to spray money around all over the place to anybody and everybody. Why not give some better incentives to first-time buyers? Stick your hand in your pocket in that area.
Well, one thing I didn't think about when I saw the ACTU head sort of talking about negative gearing for residential investment property. I read, it was probably a couple of weeks ago, and I'm probably going to butcher this number, but I'll probably get close to it. There is very little union activity in residential construction. Most sort of union activity in and around in the building sector is largely through the commercial side of things. So, throwing their hat in the mix, talking about productivity discussions around resi building when it's not really unionised, I just put a question mark against that, and I went, I need to inquire a little bit more around that in time. What Australia needs is more tradies in the resi building sector to support the acceleration of properties being built, and whether or not that's going to be influenced by more unionised industrial sort of sector. I'm not too sure about it, but I just flagged it, and I think it'd be worth looking at.
Yeah,
I think, Phil, without getting too deep into it, there's no. You start looking at one area and you very quickly get into another area. Whether you look at sort of trade unions and the restrictions around getting into certain sectors, you look at the cost of materials. You look at how hard it is, whether you're an individual trader, whether you work for a company. We've got friends who run trade businesses. It's hard. The margins are slim. The traders that I know that run trading businesses say they get hammered on tolls. Every road they go up and down, their traders go up and down in a truck, there's a toll. They get hammered with compliance. It's a look. This is the world of politics, right? And taxation and the way you spend your money and government revenues et al. But I think that there is, looking at the economy as a whole, I don't think enough people do go into trades. We've got people here, Phil, who've come out of university to do marketing, design, journalism, and whatever. They come out at the end of their university degree and they find out that the rapid advancement of technology has changed everything around them, and they're not doing the jobs that they were expected to do when they first undertook their studies. You go along and you study a trade, it's not going to change a great deal. And the value for that, for learning that trade and providing that service to your community and to the greater economy is very, very significant.
What I would like to see, we talk about on here a lot of people exiting the city, the big exodus, and moving to the regions. I'd like to know how many of them are tradies, because I have a lot of people I know who cannot make enough money working in the city. As you said, tolls, anytime you want to travel somewhere for a job, you're paying so much money. So they're leaving and setting up businesses in the regions.
It's pretty easy to get a tradie down Cronulla.
Yeah.
That's where or up in the Central Coast, there's lots of tradies up there.
Well, that's what I mean. Up the Central Coast is where a lot of them move.
I even saw over the weekend now there's a crisis in birth rates in Australia. Yeah. And it's all interconnected with cost of living and just how expensive it is comparative to living in cities these days. So even John Howard is come out of the blocks and he's telling the Prime Minister Anthony Albanese to reintroduce the baby bonus to actually get Australia moving again, literally, and making more babies, because it's at its lowest level in a long time, and I think it's cost inhibitive.
Without opening a can of worms, I think it goes an awful lot deeper than. It's not a subject for this podcast, but yeah, there are a lot of reasons why people aren't having kids. But maybe tune something else. Maybe not Broker Daily.
We probably can't tackle it on Broker Daily, but
well, we need more Aussies to take on mortgages, so mortgage brokers can keep delivering value.
There we go. That's a good way to round it out. We got one more break. We'll throw to a quick break. We'll be back into more content just after this. And we're back with Broker Daily Uncut, a bit of data that came in that sort of supports what we've been saying. A lot of people being priced out in New South Wales. Is Queensland and Victoria leading the charge with borrower activity? And I know you were recently down in Victoria, right, having a look around at the properties down there. A lot more affordable than Sydney, right?
Well, affordable is in the eye of the beholder, absolutely. But what I did note driving around, and we probably spent, 3 hours, maybe 4 hours on the road, just going to a whole bunch of different suburbs. Not a lot of for sale signs up. Not a lot of for sale signs up would be an observation. Now, where we went to a number of different open homes and had a look around, I think there's good value in Melbourne right now. And every agent you speak to will tell you that. Every single property investment advisor you speak to will tell you that. Is that really accelerating into activity? So it'll be interesting to watch to see how these numbers around mortgage approvals and how mortgages are deployed and sales volumes act in Melbourne moving forward. It's still relatively early in the cycle, and I think it will be a cycle that will burn for quite some time.
When you say Melbourne, are you looking in a city or are you looking out in the suburbs? I was looking at recently because just looking with interest to buying out at Ballarat, which is a bit out of Melbourne, but I've heard good things about that.
I've got a buyer's agent at the moment I'm working with trying to put me into a property in Ballarat. And we did the, if I can give a small plug, the Smart Property Investment Fast 50 report about a month or so ago. So where to put your money today for the best capital growth in 2026 and Victorian suburbs. Last year, I think there was one in it. This year, I think there's about 20. So it's really hit that inflection point. Ballarat, Wodonga, like regional areas like that have all been represented pretty well. Numerous suburbs in and around Ballarat. Ballarat's a big city. But quite a lot of suburbs in Victoria, in Melbourne as well. So we're specifically in around Melbourne. But, the regional areas, according to the report and the aggregate knowledge of, about 15 property investment experts would indicate that it's a rich tapestry of suburbs down there where you can probably deploy your dough for capital growth.
Yeah, well, Ballarat's only, an hour and a bit out of Melbourne CBD anyway.
It's not too far. It's not too far. I'd be okay saying yes or no if it was New South Wales, but Ballarat, it's about a couple of hours, I think, maybe.
I used to travel into work here when I was living out in the mountains, and that was about a 2-hour trek. Yeah. So Ballarat, if you can do it in an hour, I reckon you'd be lucky.
Striking distance.
Yeah, you probably see the towers from there.
Yeah, but no, there's good value in Melbourne at the moment.
Yeah, definitely. Well, we'll keep an eye on it, anything that happens in and around the property market because it's so intrinsically connected with what happens in the mortgage market. But that's all we got time for today. Thanks again for listening. If you want to see more content, visit brokerdaily.au. If you want to reach me directly, talk about anything we've discussed today, that's editor@brokerdaily.au. Thanks again for listening.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.